It's a brand new week. Welcome to Business Morning. I'm Chimeze Obi Iwagu. We begin with the oil price update as prices fell early today as governments escalated lockdowns to curb the spread of the global coronavirus outbreak that has slashed the demand outlook for oil and threatened a global economic contraction. Brent crude futures fell $1.09 to $25.89 a barrel in early trade. West Texas Intermediate crude futures was down 15 cents at $22.48 a barrel. Oil prices have fallen for 4 straight weeks and have given up about 60% since the start of the year. Prices of everything from coal to copper have also been hit by the crisis, while markets in bonds and stocks enter rarely charted territory. Now, the market has had to contend with the twin shocks of the demand destruction caused by the coronavirus pandemic and the unexpected oil price war that erupted between producers Russia and Saudi Arabia earlier this month. The current production cut deal expires on March 31. And the Organization for Economic Cooperation and Development has warned that the world and called on government to rip up spending rules to ensure speedy testing and treatment of the virus. OECD Secretary General Angel Gurria says the economic shock was already bigger than the financial crisis. Mr. Gurria said a recent warning that a serious outbreak could have global growth to 1.5% already looked too optimistic. While the number of job losses and company failures remains uncertain, Mr. Gurria said countries will be dealing with the economic fallout for years to come. According to him, the world's biggest economies would fall into recession in the coming months, defined as 2 consecutive quarters of economic declines. Meanwhile, the Nigeria's Central Bank's Monetary Policy Committee begins its rate-setting meeting today. This is the second one in the year and a very crucial one as the uncertainty in the global economy has continued to increase due to the effects of the COVID-19 pandemic. The disease, as well as the oil price war between Russia and Saudi Arabia, have damaged appetite for asset prices across the world, with investors adopting a wait-and-see approach. The outbreak and spread of the disease have resulted to volatility in markets around the world as there is little clarity on what trajectory the virus will take and how effective government measures will be. The MPC at its last meeting voted to change the CRR from 22.5 to 27.5%, retain the MPR at 13.5%, retain the asymmetric corridor of plus 200 and 500 basis and minus 500 basis points around the MPR, and retain the liquidity ratio at 30%. All eyes are currently on the committee to see what direction the monetary policy environment will look like for the next couple of months. In the meantime, the central bank has announced a raft of stimulus packages to cushion the effect of the coronavirus pandemic. And in what looked like the central bank has succumbed to the rising pressure to devalue the Naira amidst the crash in oil price and the dwindling foreign reserve, the central bank announced that with effective from today, the Naira dollar exchange rate on the investors and exporters window is now pegged at 380 Naira to the dollar and would be allowed to freely move around the targeted band. Some choose to call it technical devaluation. However, the Central Bank Governor Godwin Emefiele over the weekend clarified the supposed devaluation of Naira and says it is an adjustment of the currency. Let's take a listen.
The Central Bank of Nigeria has a responsibility to see to adjustment in the currency. What you have seen, I repeat, is an adjustment in currency. And of course, we have often been accused that we have a hand. We don't have a hand. What happens is that we allow the I&E window, which is a dominant market, to dictate the exchange rate in the market. So what we've done is that in the I&E window, there are buyers and sellers of foreign exchange. There are people that need FX. There are people who want to provide FX in the market. So what has happened is that at this time, central bank says, I'm providing FX in that market at 380. If you have dollar and you want to provide yours at higher than 380, go ahead, but provide it in the market so as for us to use it to fund our domestic obligations. What does that also mean? If you recall, in 2016, 2017, there was a time the exchange rate rose to as high as 420. People were speculating to go higher. But up till recently, up till last week, the exchange rate was about 360. So what are we saying again? High earning window is the market where I provide FX, you provide FX. You determine the price based on what you have available. So I'm saying today, I provide FX at 380. If you have, provide yours. If I think mine can come at a lower price, I provide at a lower price. So that is what is happening. It is an adjustment, but in economics, in foreign exchange management language, it is not a devaluation.
This is Channels Television's breaking news.
And news just getting to us says that the Nigeria Center for Disease Control has confirmed the first fatality from the COVID-19 in Abuja this morning. The NCDC also said 5 new COVID-19 cases have been confirmed in the country. 2 of the cases are in Abuja, 2 in Lagos, and 1 in Edo State. NCDC says 2 of the cases are returning travelers from the UK. This brings to 35 the number of cases recorded in Nigeria. All right, still looking at what the central bank had announced as what the Naira movement should be going forward from today. Let's bring in Adedayo Bakare, an investment analyst with AfriInvest Securities, to make a sense out of this whole scenario. Good morning, Adedayo. Thank you very much for joining us. All right, just while we wait to get Adedayo, it's important to note that the Nigeria Central Bank's Monetary Policy Committee begins its rate-setting meeting today. This is the second one in the year and a very crucial one as the uncertainty in the global economy has continued to increase due to the effects of the COVID-19 pandemic. The disease, as well as the oil price war between Russia and Saudi Arabia, have damaged appetite for asset prices across the world, with investors adopting a wait-and-see approach. The outbreak and spread of the disease have resulted to volatility in markets around the world, as there is little clarity on what trajectory the virus will take and how effective government measures will be. The MPC at its last meeting voted to change the CRR from 22.5 to 27.5%, retain the MPR at 13.5%, retain the asymmetric corridor at plus 200, minus 500 basis points around the MPR, and retain the liquidity ratio of 30%. And the oil price update, oil prices fell early today as government escalated lockdowns to curb the spread of the global coronavirus outbreak that has slashed the demand outlook for oil and threatened global economic contractions. All right, let's welcome Adedayo Bakare, an investment analyst with AfriInvest Securities, to make a sense of what is happening at the currency market at the moment. Good morning, Adedayo.
Good morning, Chimeze. Thanks for having me on the show.
Now, adjustment, devaluation, technical devaluation, what is the difference?
There's not much difference. I mean, given the fact that in Nigeria we operate a multiple exchange rate regime, then, having to distinguish between the difference becomes a bit confusing for players in the market and general public. For instance, at the official rate of the CBN, the official segment, the rate there up until the adjustment that was made last week, it was 305. And we've had 305 for almost 4 years now. And so when you move the rate from 305 to 360, then that is a devaluation because at the official window it was a fixed rate of 305. It wasn't market reflective or market determined. It was basically just the CBN selling FX to banks at that rate. When you go into the in FX window, we have a bit of flexibility. So the CBN governor makes a valid point that in terms of the transactions done in that window, we have mainly private sector participants comprising foreign portfolio investors, non-bank players in the market. You have exporters as well playing in that window. So to a very significant extent, that window is at least what we agree is market reflective. And so movements in the INEFX window, given that it's a more flexible arrangement, could be said to be depreciation rather than say, oh, it's a devaluation of the currency.
Naira at 380 to the dollar at the INE window. What will be the implications for not just the portfolio investors, but for businesses?
Obviously, I mean, FX, liquidity, currency risk, both when you think in terms of the liquidity and also the currency risk, both have been rising since early in the year. And with COVID-19 spreading rapidly and negatively impacting advanced economies of the world, and with the spat we're seeing between Russia and Saudi Arabia, then you expect that we might have a prolonged incidence of lower FX flows into the market. And basically what that means is a lot of the demand for FX we're seeing in the markets having to meet all those demands, given reserves that is falling, might be a bit of a challenge. What we saw last week and I mean what we've seen recently is the fact that when you think in terms of non-CBN participation in the INEFX window, it has fallen very significantly. So from between April 2017 and December 2019, when the window started, and I mean up to the year of the end of 2019, CBN's participation in that market was very limited to around 20%. But what we've seen in the past months, from at least from February and March, we've seen that CBN is heavily involved in terms of meeting FX needs at that segment of the market. And up to date to March, CBN's participation is as high as 76% in the INEFX window because a lot of foreign investors are leaving the Nigerian economy. Also, we're having a lot of demand even from the non-oil and the oil sector in Nigeria. So basically, what it means for businesses, for even the direction of the economy, is that we might have a lot of FX liquidity pressures, and also you might have maybe depreciation in the exchange rate going forward.
Now, the exchange rate is also expected to be adjusted to about 360 Naira to a dollar, as against its current rate of 307 Naira to a dollar. That's the official central bank rate. What is your take on this?
We believe it's a good development. Obviously, to correct for all sorts of distortions in the market, it's always better to have a unified exchange rate regime in the economy. But in Nigeria, what we notice is we have different segments, and the 305 to 307, which has basically been moving within that band of 305 to 307, has been in place for almost 4 years. And most of the FX sales we're seeing in the market is actually not in that segment; it's in the high and FX window. So 305 sales in the 305 window, from a report we saw from the IMF, was around $100,000 daily as at Q1 last year. So basically that is suggesting that not a lot of transactions are being done at that window. But we know we still have that window because government does its businesses based on the 305 to 307 rate of the Central Bank of Nigeria. So the implication of this adjustment is that for government, it's a very, very good thing because oil revenues are currently tanking, and with the adjustment in exchange rates, that means in Naira terms, collect more revenues. If they collect more revenues, they should be able to meet a bit of the obligations without having to borrow as much as they would have to normally. So for the adjustment, we believe it's overdue, and we think it's the right decision to make. Also, in terms of the distortions you market in the market, in terms of the arbitrage opportunities in the market, you see that the room for that also has reduced to a very good extent. Also, when you think in terms of the foreign exchange reserves management, by moving, adjusting the exchange rate upwards, that means the demand, at least for FX, there should be less demand pressure for FX, and it should enable the CBN to serve, some of its reserves. Obviously, looking forward, obviously, the feature or direction of the exchange rate or the reserves will determine. Will depend on what is really going on regarding COVID-19, regarding the demand for oil, the supply of oil, also regarding how the investor environment or investor sentiment evolves over the coming months.
Now, in this whole thing, how is it expected to play out in the parallel markets?
Okay, the CBN has restated that supplies to PDCs would continue. So at least that should mean that we have also less imbalance in that segment. Between 2015 and 2016, the major pressure we saw at the parallel market was because CBN actually stopped selling to the BDCs at a point. And that was because reserves had grossly reduced, and CBN was trying to conserve reserves. They were also engaging in all sorts of FX demand management policies just to slow down the reduction, the pace of reduction in external reserves. But we think with the commitment of the CBN to continue to supply FX into the BDCs, then we should see a bit of less volatility in that market. But obviously beyond today or going into the rest of the week, there's a lot of demand outside what is permissible for the CBN, because we have a list of 43 items, for instance, that have been excluded from accessing forex from CBN. So in that respect, we could see a lot of demand, which the CBN might say is non-genuine, but which are still important to driving economic activities. So in light of non-official demand, we could see a spike in rates in the FX markets, really. But we are really impressed by CBN's decision to actually keep supplying to the BDCs. So that should at least ease the pressures a bit. But ultimately, we think rates will still go a bit higher, given all the risks we see in the global economy and even locally.
Okay, now the central bank governor met with the CEOs of the deposit money banks over the weekend, and they resolved that profit will not be the primary motive at this time. Rather, preserving confidence, financial stability and support for the economy will be the overriding objectives. What kind of strategies do you think the banks will adopt to ensure confidence and financial stability, although some of them have stopped charging for transfers?
Okay, it's a bit unclear in terms of what the CBN really wants to do, or what the deposit money banks want, what they want to do. But from what we've seen so far and what is happening across the world, we think some of the steps that will probably be taken by deposit money banks is to find a way to structure some of the loans they have, especially in sectors that are exposed to sectors that are most exposed to the risk we're seeing in the market. Some of those sectors include the manufacturing sector, includes trade and commerce, it includes oil and gas. A lot of the loans granted in the banking system is to these sectors. So we think for banks, they'll be a bit more lenient with borrowers and try to seek restructure loans to make it easier for these companies to be able to pay back. So in terms of other initiatives they can do to support the economy, I think that is left to banks to decide. There's not a lot of public information on what banks want to do. But in terms of restructuring loans and making it easier for companies to meet their obligations in this tough period, we believe it's a step banks likely have to take.
All right, thank you very much, Adedayo Bakari, an investment analyst with Afri Invest. And when Business Morning returns, we look at the manufacturing sector and the additional 1 trillion naira targeted at the sector. To stay with us.